Good afternoon. This is the Chorus Call conference operator. Welcome, and thank you for joining the ASEA First Quarter 2016 Results Conference Call. As a reminder, all participants are in listen-only mode. After the presentation, there will be an opportunity to ask questions. Should anyone need assistance during this conference call, they may signal an operator by pressing star and zero on their telephone. At this time, I would like to turn the conference over to Ms. Ada Ingrisani, Institutional Investor Relations Director of ASEA. Please go ahead, madam.
Good afternoon, everyone, and thank you for taking part in today's conference call for the presentation of ACEA First Quarter 2016 results. Alberto Irace, CEO of the company, will now present the results. Then Alberto Irace, Demetrio Mauro, CFO of the company, and I will be available for a Q&A section. Please, Alberto, go on.
Good afternoon to everybody. The group has produced a positive set of results for the first quarter, reflecting our efforts in re-engineering and the process and the digital transformation of the group, with the aim of implementing a new operating model for the company. April saw successful completion of go live for distribution, public lighting, and the company ACEA Ato 5. The operating model just implemented is based on processes fully integrated and digitized, and related to that, there are some efficiency that are a pillar of our business plan. Next step is foreseen for the end of July, when we will replace the billing system for electricity with an integrated system, eliminating the fragmentation that gave rise to past difficulties in billing to the final customers. Before moving to look at result, I would like to draw your attention to the fact that the regulatory change introduced by the AGSI resolution 654 of 2015 has eliminated the so-called regulatory lag in electricity distribution, and based on this change, distributors recognize the revenues linked to capital expenditure from an accounting point of view at the same time as the expenditure is carried out, according to the accounting principle of maintaining the revenue strictly related to the cost and vice versa. This means that in the year in which the change is implemented, that is 2016, we have recognized non-recurring income totally 90 million, of which 22.5 is attributable to the first quarter. Let's move on the results. EBITDA is approximately 17% to 207 million, after stripping out the impact of the above regulatory change, EBITDA is up 4.1%, EBIT is up almost 90% to 19% up to 124. Is down by almost 3% after stripping out the impact of the regulatory change just mentioned. The reduction in EBIT reflects increase in depreciation and provision for early retirement and redundancy scheme. Net profit is approximately 33% up to 67 million compared with the first quarter of 2015. And the increase is 2.2% after stripping out the impact of the mentioned regulatory change. Net debt is 2,174, up approximately 160 million compared with the end of 2015, but we will come back later on this increase to better specify the reason of this increase. Going to slide 3 and taking a closer look at EBITDA, as mentioned earlier, has grown as a result of the progress made in the operational efficiency and the contribution from all different business areas. Taking A closer look to the environment segment has contributed 13 million to EBITDA, up 4% on the first 3 months of last year. The improvement reflects positive performance from ARIA and SAO, thanks to the greater quantity of energy produced and to the entry into service of the new waste treatment plant in Orvieto. Following the release of the Kyclos plant from seizure last December, work is being carried out in order to return the plant in operation. We have invested 1.6 million in this sector, essentially in the upgrade of line 1 at San Vittore, where the renewal is going on, which is due to enter in service toward the end of this year. The energy segment EBITDA is approximately 4% up to 33 million, thanks to an improvement margin on sales, totally 23 million. The improvement reflects growth in the energy margin on an unset protected market, thanks to an increase in sales price. The increase was partially offset by reduction in the contribution from production, which is down to 9 million, reflecting the price trend and the slight decline in the volume of energy produced by the group hydroelectric plant due to the meteo situation and the waterfall. The energy segment invested a total of 12 million, primarily in revamping the Castelmadama power plant. Going to examine the performance of the water business, we can see that the EBITDA is up by more than 80%, thanks above all to the contribution from Acea Ato 2. We invested approximately 42 million in this business, of which 36 million in Acea Ato 2, the company that manages concession in the area of Rome. EBITDA of the grid segment is up to 81 million and reflects recognition of the above non-recurring income linked to the regulatory change introduced by the EGSI resolution, which has eliminated the so-called regulatory lag. But even after stripping out the impact of this change, the segment EBITDA is down of 3%. Investment in this business amounted to 40 million and primarily relates to Acea distribution investment in expanding and maintaining its electricity grid. The parent company reported it has reached the EBITDA break-even, marking an improvement of 1.3 million compared to the same period of last year, thanks to the cost-cutting process. Slide 7 shows EBIT up 19% and net profit, which has risen by around 33%, again reflecting the impact of the above regulatory change, which has eliminated the regulatory lag. We have seen a rise in amortization and depreciation linked primarily to increased capex and an increase in provision for early incentivized retirement. There was also a reduction in bad debt provision due to an overall improvement in the management of receivable, reflecting the decision to take a more selective approach to our customer base in energy segment, which is producing the result that we planned. This has involved the introduction of an accurate rating system for selecting customers and to select them according to an acceptable risk profile. As noted previously, net debt of 2,174 is up 34 million on the 1st March of last year, and 164 on the figure of the end of 2015. The increase in working capital, which is only temporary and will be reversed as early as the second quarter of the year, primarily reflects the change in operating and payment process resulting from a migration to a new IT platform. We implemented a centralized platform of treasury, and we decided also to pay more debt for before the migration in order to avoid issue of migration. Also reflect the net debt, the timing of approval of the new tariff expected by the end of May. And as you know, the net debt reflects some seasonal factor occurring to the first 3 months of each year, also related to the increase of investment of 2015. The group debt has an average term of maturity of approximately 6.6 years and the global average cost of just over 3%. That was the presentation.
Now we can start with the Q&A section.
Thank you very much. Excuse me, everybody. This is the Chorus Call conference operator. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. To remove yourself from the question queue, please press star and two. We kindly ask to use handsets when asking questions. Anyone who has a question may press star and one at this time. The first question comes from the line of Joares Javier of Mediobanca. Please go ahead.
Hi, good afternoon to everyone. This is Javier at Mediobanca. Three questions on my side. The first one is on the debt evolution. You have mentioned the seasonal deterioration in net working capital during the first quarter of the year. That is partially explained by the migration into the new billing system, if I understood that correctly. Can you elaborate for us how this is going to be reabsorbed during 2016, and if you may expect that with the new billing system, all these or part of this higher or deterioration in net working capital should be reabsorbed through 2016. That is the first question. The second question is on the synergies. We have seen that the corporate division is already at break-even. Can you elaborate for us the main lines for the company to extract additional synergies and where the management is putting the accent for making the company more to make the company more efficient? And then the third thing is on the line of provisions. There is quite a sizable increase on total provisions during the first quarter of 2016. What we should expect for total provisions by the year end? Many thanks.
Okay, I will answer only the first part of the first question, then I will hand over to Mr. Demetrio that will follow me with the other question. The increase of the net debt is not due to the implementation of the billing system, but of the implementation for the new centralized system of treasury. So we had to migrate all the treasury system to a new system, and we decided to accelerate some payment in order to migrate in a more clear system to the new treasury system. So it's a technical reason to some extent. On the other hand, as you know, we have an increase in the first quarter that we define a season increase in the round of 70 million last year, if I remember. So what I can say is that it's reasonable that will be reabsorbed in the next 3 months. Because if we look at the situation of the company, taking into account of this effect, the company is still generating cash.
Yeah, so I can also expand on the first answer. So we are confirming a robust and solid cash generation. So the profitability of the company is improving. And we are also enhancing the working capital management. So all the metrics related to account receivables is improving. We are improving DSO, which went from 130 to 124 days. We are improving the billing system. So the real underlying performance is really improving. As Alberto said, we have implemented some new processes. In particular, we have implemented a factory payment, a centralized factory payment for all the companies. So the switch to the new platform has generated a spike in working capital, which will be fully reabsorbed in Q2. Going also to the second and the third questions, which to a certain extent are interrelated. So let me start from the provisions. We have increased the provisions for restructuring, so we are moving forward in the restructuring of the company, which will imply also a reduction in some functions, and we have recognized a provision of 8.5 million for restructuring, which will cover all the costs associated to restructuring up to June 30, 2016. So we are moving forward in reorganizing some functions and also in sourcing some activities according to the ACEA 2.0 program. So we are fully committed in capturing the synergies which have already been communicated, and I can confirm we are fully on track according to the objectives that were set forth and communicated to the market within the strategic plan of the company.
The level of provision by the year end.
The level of provision by year end, we may expect another restructuring provision in the second half for an amount which I believe will be below what we have recognized in the first half.
So everything is clear, Javier?
Yeah, many thanks.
Okay.
The next question is from Bartoli Enrico of MainFirst. Please go ahead.
Hi, good evening, everybody. A few questions on my side. First of all, on the performance of the water business in the quarter, particularly 802, it was particularly strong. Could you please elaborate on the main drivers of that? If I understand well, the new tariff is going to be approved in May, so if the cost cutting has been a main driver of the strong performance in the quarter. And if always on the water business, if you can provide some details about what could be a reasonable outlook in terms of the recognition of the quality premiums, if they can be, you think it's possible that they can be recognized already in 2016 tariffs, or we have to expect them starting next year. Then I want to go to the network business, to the 90 million one-off that you expect this year. Could you provide some details about that, and particularly if this is going to be a cash item? And secondly, given that this will provide significant upside to the net profit, if will fully contribute to the dividend distribution consistently with your dividend policy. Thank you.
Okay, let's start with the water. In the water, the contribution it comes from the to apply the rules of the new tariff system, both for the downside related to the decrease of the remuneration allowed in tariff, but also including all the other mechanical, let me say, component. So we applied only the rules that we considered mechanic, not the one that implies some decision from the local and national authority. In other words, it's not included any contribution coming from quality, and that leads me to explain about the approval process of the quality component, which is at this time being in discussion with the local authority, and is supposed to be approved by May. As you know, in the process of approving the tariff, the company have the right to propose to propose their view on tariff, and at the time being we are discussing with the local authority in order to agree on a proposal on which they can also agree, in order to have a technical proposal to the local authority that match perfectly with the one that, in the case we want to propose one in autonomy, would at least match the one proposed by the technical office of the local authority. That's what is going to happen in the next probably days, and from that I can say that we are discussing exactly about the quality component, which is at the maximum. I would like to remind you, 40 million for the component for ATO 2. On the other,
sorry, just on the water. So without considering any upside from the quality premiums, can we consider the growth that you had in this quarter compared to last year that can continue also over the next quarters? Can be assumed as a reasonable proxy of the growth?
Well, as the different component that contributed is related to the increase of the recognized bad debt in the new system, and the component of FNI, which is in line with what we expect to be approved by the authority. So we can say that essentially we will have a growth which is in line also in the next quarters. Okay, taking apart the quality, which is of course would be on top of it.
Yeah.
With regard to your question on the 90 million one-off and on whether or not this is also a cash impact, I wish to clarify that this one-off change will just accelerate our ability to recognize revenues in our financials, but nothing will change with regard to our ability to bill our customers, which means that we are accelerating the recognition of revenues, and if you wish I can go more in details, but nothing will change with regard to our billing system, which means that from a cash perspective there will be no change. And if I have to be precise, and since the net profit of the company will also be significantly impacted by this change, we will have higher taxes to pay. So from a strict cash perspective, the impact of this regulatory change will be negative to the extent related to taxes related to the incremental profit. In other words, we are expecting this change to impact positively our EBITDA by approximately 90 million euros, 90 for the full year, which translates into an improvement of net profit of approximately 60 million. So from a cash perspective, there will be a negative impact of 30 million associated to the tax burden related to the profit. With regard to the dividend, the board is reaffirming the guidance for 2016, and therefore also the guidance for the dividend is confirmed.
That means just to add that we gave two guidance between 50 and 60%, and we will stay in that bracket.
Have you some other question?
Sorry, no, just on the dividend. So the 50-60% will be calculated including the 60 million impact, or on let's say a clean figure.
Yes, including.
Including the 60 million.
Including.
Okay. Thank you.
The next question is from Gamberini Stefano of Equita SIM. Please go ahead.
Good afternoon, everybody. Three questions. First of all, regarding the investment in the digital meters, if I'm not wrong, in your business plan you have around 100 million euros investments. Could we expect some acceleration, or if you can update us regarding what are the rules that are already approved by the regulator, and what could be the upside on these investments, also regarding possible higher investments for an anticipation of substitution of the old digital meters. Second, regarding the upside on the optic fiber networks, if there are some novelties also regarding this item. We know that Enel want to invest in the rest of Italy, but without your investments in Rome, probably all these investments does not have so much value. So if there are some update also on this item. Then I have other two quick questions regarding the tariff in the water. You said in May there will be the decision. Do you see any risk related to the fact that there are election in June, and so that the local authorities will postpone this decision? And second, regarding the components that allow the tariff increases in the water, if you can help us to understand the breakdown among the Fondo Nuovi Investimenti, the OPEX, if the OPEX component is up or not, and the third, the decline in the return, allowed return. Many thanks.
Well, let's try to to answer all your questions that are always in detail. About the digital meter accelerating for distribution and the fiber issue, which is related to that to some extent, what I can say is that the regulatory framework foresee a step in June, when we will have the opportunity to present a plan that with the aim to increase the power available for every single final customer up to 10 kilowatts, and related to those two issues, we will have the opportunity to settle our idea and proposal for the fiber issue. Of course, in a framework in which the authority will allow us to accelerate CAPEX program, to increase the power available to the final customer, and to replace the digital meter. Of course, we will evaluate the opportunity to accelerate the CAPEX program, but that would have an impact, of course, on our business plan, and it is a decision subject to the board of directors. I can say that, of course, we are working on that, and we do consider it as an opportunity, as the chance to say by discussing about the business plan that goes on top the business plan that we already presented. Going to the risk for the approval of the tariff in water, the timetable to approve was the end of April. By the end of April, we have the right to present our own proposal. As I said before, we are now discussing with the technical, the office of the local authority in order to agree on the technical aspect of the proposal, so that we can agree on the basis on which the proposal can be in the eventuality make to the national and the local authority in order to be aligned on that. And honestly, I think that the approval could it is possible, be done by the local authority even before the election, which is foreseen the 5th of June. But in the case that would be postponed, there is a timetable which is very strictly in the national regulation allowed us to present our own proposal, which will be probably presented by the end of next week or the beginning of the week coming. So we will have one proposal from the company, from which there is a strictly already defined timetable with the mechanism that if the local authority does not pronounce anything, our proposal is intended automatically approved. Going to the breakdown, I'm not able to give you the breakdown precisely right now. Maybe we can be back to you in more detail when the proposal will be approved by the local authority.
Okay, just if I may, one quick follow-up regarding this potential higher investments in the distribution, just to understand what could be the sites and if the investment in the fiber optic could be partially or in some way also included in your investment for the digital meters, so in the RAB to build the digital meters or not?
Well, you see, we have in our capex program, we included all the ordinary activity, let me say, of that are of course part of our capex program, both to increase the power available and to change the meter. We have the opportunity to propose a plan to accelerate those capex in these two aspects, which of course goes together, to increase the power availability, which means to go inside every building with the power cable and to replace the digital meter. If that's what is foreseen by the regulation approved last year, that's what we are now preparing, and we are going to discuss with the national authority of a plan to accelerate, let me say, in a 5 years timetable, the replacement of the digital meter and the capex to increase the power available. In that case, in order to reach all the possible synergies, we will also add probably a program to develop the capex program related to the fiber to the home for the buildings of the area of Rome. But it is strictly related to a discussion that has to take place, and will start in the month of June with the authority.
Okay, many thanks.
We have a follow-up question from the line of Suarez Javier of Mediobanca. Please go ahead.
Again, I'm sorry.
Javier, we don't hear you.
Can you hear me? Can you hear me now?
Oh, yes.
Yeah.
Oh, many thanks. Sorry for coming back again on the dividend. This is a follow-up after Enrico's question on the dividend. So for the sake of clarity, at the latest strategical presentation, the dividend guidance was from the base of 50 euro cents per share paid in 2015, a growth that goes between 3 to 6%. And now, there is this one-off that means 90 million euros of more revenues that impacts the net income in 60 million euros. So can we assume that this could include a one-off increase in the dividend in 2016 that goes along the lines of 60 million euros multiplied by 50 to 60% and divided by the number of shares?
Okay, what you can assume is that will prevail the guidance of a 50 to 60% of payout, including also the one-off. So will prevail the 50 to 60%. That means that the growth will be the one that will be
more than
6%, of course.
Exactly, and that 60 million euros of net income is included into that guidance of growth for the dividend, correct?
Yeah.
Yep.
Okay, and then the second question is if you could kindly update us on any conversation with any of the candidates for the next elections in the city of Rome, and if you can give us any feedback that you may have on those conversations.
Honestly, I didn't have any conversation because that's a moment of campaign, so everybody is trying to convince the opinion. And let me say it's not a good moment for conversation. Also, Acea is an apt issue for the campaign. But what I can say is what I already said to many of you, that the campaign, it's not the right moment to evaluate the position of the candidate, because we have to face and to deal with the position of the mayor, which has fully the responsibility of managing a complex city as Rome, and whatever will be, will have the equilibrium and to manage all the issue, including the relationship with Acea in the respect of the law, of course. What I can say is that what is going on is that probably we will have in the round of these 4 candidates, which is one of these is Raggi, then there is Giacchetti, and then there is Marchini and Meloni. Those are the ones that will probably compete for the second phase of the election, because it's likely to go to the second turn that will determine the final winner of the election, of course. So we will see. We have many polls almost every day that comes out from the news, and most of them say that those 4 will fight for the second turn.
Many thanks.
Let me say that to conclude that we have a business plan. We are strongly committed to realize what the board approved, and we are focused on that. Let me say that are in the perimeter of what we can do for Acea.
Many thanks.
We have another follow-up question from the line of Bartoli Enrico, MainFirst. Please go ahead.
Hi, sorry. I have an additional question going back to the network business, just to understand how the numbers will move. So this year we'll have the 90 million euro one-off. So net of this impact, the targets, so what we see starting 2017 will be consistent with the targets that you gave in the business plan, right? So just to simplify, taking out the 22 million in this quarter, so the EBITDA would have been 58. So this clean number is what can be assumed for the next few years. Obviously, on an annualized basis.
The 90 million impact, of course, it's not recurring. That means that you can assume that the 17 will be related with the plan, the business plan. To be honest, there is a positive impact in any case also on 17, because we accelerate the revenues 17 on 17, so the year on year. So you could probably assume the revenues to be clear of 18 on 17. To be honest, to be clear.
Okay, thank you.
Because it's recurring, so you will not have the 90, but you will have in 17 the revenues foreseen in 18.
Okay. Thanks.
Because the principle is to maintain a strictly relation between the capex cost and the revenues related.
Yeah. But in the targets of the business plan, you were already taking into account this effect, or is something on top of that?
No.
It's on top of that. Okay.
It is on top of that. Yeah, of course.
Thank you.
We couldn't take into account because it was set. It is a principle on which we had to reflect, and also took into account that other operators decide to apply this principle, and we decide to follow the operators that apply this principle.
Okay, perfect. Thanks.
If there are any other questions, okay.
We have no further questions registered at this time. You now proceed with your closing statement.
Okay, thank you very much. Thank you to all of you.
Thank you to everybody.
And the Investor Relations team, as usual, available for further information. Thank you.
Bye.
Bye-bye.